The market was probably too complacent about rate hikes and found from Powell and the Fed messages that the rate hike path is unchanged. Not only unchanged, but that the Federal Reserve is going to continue with the current path of rate hikes, even if the economy continues to slow down and employment starts to weaken. Because the number one factor for the Fed policy is to curb inflation. Why is this? Because the Fed must be quite worried about the fact that in July, despite the correction of commodities since March, despite the fact that the index of freights has come down as well to one-year lows, all of those factors, inflation has not been coming down as fast as it should in this period. And winter is coming. And with winter comes probably stronger demand for commodities and a higher level of government spending that adds to inflationary pressures. Rate hikes are an important factor, a necessary factor, but not the only factor required to curb inflation. The problem in inflationary pressures right now as well is that most of the anti-inflation programs of governments are more spending, more deficit spending, and therefore more use of new units of currency. Therefore, they're inflationist. The other problem is that even excluding those programs, most governments are unwilling to reduce the deficit spending or to stop the fiscal policy that is monstrously accommodative. Therefore, we need to understand from the investment position that rate hikes are going to continue, that fiscal policy is essential to curb inflation, that energy and commodities might start to come back into winter, and that in our portfolios we must have an overweight position on the dollar, and we must also keep a very underweight position on very cyclical stocks. The idea, obviously, to have a cushion that allows the severity of the changes into winter reasonably stable. Thank you for watching this video. Please subscribe to my channel, like my videos, leave your comments below, and keep defending freedom. Thank you very much.